How you doing, Steve?
I'm fantastic. How are you?
Yeah, not bad, not bad. Okay, so last time I saw you in Nashville, we sat down, we had a conversation, and you said to me, yeah, Pete, the top of the market's going to be about October. And it was actually, I think it was November 9th. So you pretty much called the top.
Yeah, November 9th was my birthday, so I was trying to get it in a little bit before that.
Oh, I didn't listen to your advice. I did. November 9th, your birthday?
It is.
Huh. I'll tell you a story about November the 9th after this. And I completely didn't listen to you, and I held through it. I'm still holding. And I should have listened to everything you said. What did you know that we didn't know? That was voodoo, man.
No, it's not really voodoo. It's called watching the Fed. I came from the world of fixed income, and you watch the Fed very carefully. You analyze every word. You try to see where interest rates are going. You try to see what the Fed's doing. There's an old adage, don't fight the Fed. And I was watching rumbling. So first of all, in the summer, there was inflation, and the Fed was saying, oh no, it's transitory, right?
Yeah.
And the Biden administration was saying, oh, it's transitory. Well, it wasn't transitory, and we all knew it. We saw prices going up, and they continued to go up, obviously. So around September, October, we really started watching the Fed change their tune. And I watched what Chairman Powell was saying, watched what the rest of the Fed was saying, and they were starting to believe that inflation was setting in, even though publicly they were dismissing it. So I assumed that the Fed would begin to start unwinding its balance sheet and possibly start raising rates as soon as inflation got bad enough. So October is about the time that the Fed announced that they were going to start, that they were going to slow down the purchases on its balance sheet. Anytime that happens, markets are going to start dropping, all markets, right? So yeah, October, November, about the same. But really what happened was all markets from October really peaked. NASDAQ, S&P, the bond market, crypto, all of it. Bitcoin peaked in November. Bitcoin also doesn't track the rest of risk markets exactly. It still tracks it right now. But that's really the event that happened. I was just watching the Fed, and I'm still watching the Fed. And I don't think that any risk assets are going to go back up. They're going to continue to grind down until the Fed changes its tune.
Because a lot of people were calling for 100K Bitcoin, 200K Bitcoin, and I ignored my friend Steve. I was like, no, come on, Steve. We're clearly going to shoot over 100K. And I think, obviously, a lot of us are naive. I'm not somebody who's worked in the markets. This is your career, right? You've done this for a long time. And I wouldn't even have known that what happens at the Fed influences the Bitcoin market, the Bitcoin price. It just didn't cross my mind. I thought we had just this weird independent market. We go to the moon, we forget about all that. But we're obviously intrinsically linked to the rest of the economy now, what happens. So I want to ask you about that. So you say unwinding the balance sheet, but then you said slow down asset purchase. So they're still increasing the size of the balance sheet, but at a slowing rate, or they're actually unwinding the balance sheet?
Yeah, they're actually, and you pointed it out, they're two different things, right? What happened starting last year was the Fed slowed down its purchases. They were on a clip to purchase a certain amount of assets every month. They began slowing it down, and by the time March hit, they weren't adding any more. And then starting in April, they started unwinding it. So the unwind started happening in April. And then, of course, we got, a rate hike in April that a lot of people really didn't expect. So rate hikes plus unwinding the balance sheet is basically taking liquidity out of the system. And that liquidity is what people have used to make investments in risk assets.
And when they're buying assets, what exactly are they buying?
Mostly they're buying U.S. treasuries. So the U.S. government is issuing treasuries. They're issuing debt to pay for things. And then the Fed is buying those treasuries from the U.S. government by essentially printing money. So they're just printing money to buy their own debt, lend to themselves. So
why don't they just issue less treasuries?
Well, then the government couldn't pay for things, right? So the government has certain things it has to pay for, right? Roads, infrastructure, military, weapons to Ukraine, art. I mean, there's all kinds of things that it pays for, right?
Art.
Yeah, I mean, I say art because there's a lot of federal grants that pays for art.
Okay.
There's most of them are what we call pork barrel spending. Some senator or congressman will say, "Hey, yeah, I want a art, an art museum in my district," and it might be funded by the federal government, and or there might be some museum, or there's a lot of different things that are funded.
Is that the horse trading? So when they want to get a bill through, someone's like, "Well, if you want me to sign it,
Yeah.
I want a museum here."
Yeah, I want a museum. I want a military base. I want a freeway named after me. That's why we have Senator so and so freeway, or there's a lot of things that the federal government pays for.
So essentially, they're just issuing a loan to themselves.
That's exactly what they're doing.
Okay. And in terms of unwinding, is that essentially paying it off?
Well, sort of. What they're doing essentially is, bonds mature, and as those bonds mature, they just don't buy them back, or eventually, what they might do is sell off those bonds, right? But right now, all they're doing is, as they're maturing, they're just not buying back as much as they had on the balance sheet. They're just rolling it off. It's what we call rolling down the curve.
Right. So anyone who's a Bitcoin investor, Bitcoiner interested in this, they should be really paying attention to the Fed now.
I think they've always should have been paying attention to the Fed. I mean, we had crypto winter, back in 2018. And about the same time, there was movement in the Fed, and it prolonged crypto winter. All risk assets kind of stayed flat or went down, and then they changed their tune and started going back up. And then you had COVID, and and then everything, all prices dropped, and then the Fed stepped in again, and then all prices went up again. I mean, it's a cycle that's been happening, since the Fed's existed. The difference is in Bitcoin has only been around since 2010, really.
Okay.
I mean, in all practical terms, and we've been in a bull market, a cyclical bull market, ever since Bitcoin's been around. So we haven't really seen the effects of a recession, nor have we really seen the effects of Fed tightening, like real Fed tightening, like we're seeing today. The last time that we had real Fed tightening was in 2007.
Right. Okay. Interesting.
Yeah.
Yeah. Okay. And that was what launched Bitcoin.
Yeah.
Okay. Right. So are there, for somebody like me or somebody listening who doesn't do this all day, every day, are there simple kind of rules that you can follow in terms of trying to understand certain decisions the Fed will be making about, okay, that's kind of bullish, or certain things that are kind of bearish?
Yeah. I mean, really, when you start seeing the Fed change their way of speak, right? Like, I'm not that smart of a guy, right? I just,
Wow.
I've got like a degree in English, right? And I kind of use rhetorical theory to tear things apart, right? I've got other degrees too, but my main one's in English.
How many degrees have you got?
I've got an MBA in economics, and I've got a Master of Science, and then a Bachelor's of English.
Got nearly as many degrees as Craig Wright. Have you
Almost.
Can you bring him in on a wheelbarrow?
I was the founder of Bitcoin.
Let's not go there. Danny will start giving me dirty eyes. Yeah, are there certain, you say you watch their language, though. Is it feel like if they're starting to tighten things, therefore they're trying to take money out of the economy, there's less there's less stimulus, therefore it will be less bullish for Bitcoin, but at a time when they're kind of putting money into the market, trying to stimulate the economy?
Yeah, look, I'll give a few examples, right? And these are real good, tangible examples. Back in 2008, it looked like everything was completely melting. The world was falling apart. Banks were going out of business. Big banks, right? Bear Stearns, Bell, and the Fed did slowly start to lower rates, but it didn't really do anything. The economy is still falling apart. It wasn't until February of 2009 that Ben Bernanke made his famous helicopter money speech. And at that point, the markets realized that the Fed was going to do whatever it took to support the economy. They were going to print unlimited amounts of money, if that's what it took. they were going to open up the Fed window, which means that they were just going to lend to anybody that needed it at very low rates, and banks could essentially recapitalize themselves. When the markets saw that, and when he made that speech, the markets turned on a dime. And that's when everything started charging forward. Same thing this last year. I just mentioned that the rhetoric was inflation is transitory. And when there started to be questions about the transitory nature of inflation, that's when we knew that the Fed was gearing up to get ready to do something about it, because they do have a mandate to slow down inflation. And when inflation got to the levels that it did, north of 8% in the US, north of 9% in the UK, they've got their own problems.
Quoted.
Quoted.
Not real.
Yeah. By the way, real inflation is like 20%.
I know.
Have you filled up your gas, your car lately?
Well, I put out a tweet this morning. Record prices on the forecourt, £1.78, £1.78.5 in the UK. I think one person reported one place that was like £1.92 for diesel. That I worked that. That's per litre. So I worked out the gallon price. So it's $10.50 a gallon. Right. But they think it's going to hit £2. So it's going to hit over $11.30 a gallon. They think very, very soon. Yeah.
Well, you're down in the South right now, and this is where we make a lot of gasoline, right? You're close to Alabama, Louisiana, Texas. This is where oil is taken out of the ground, and then it's refined all around this area. So this is where the gas is cheapest. Diesel $6, right? So if
not bad.
Well, but this is where it's produced.
Yeah, I know.
Right?
It's £120, £100 to £120 to fill up my car.
Yeah.
At the moment, I remember the first time I came to the US, first time ever, and I rented a car. Was it the first time? No, it wasn't. It was when I came for my 30th. I rented a car, and it cost me like $25 to fill it up. And I was like, what the fuck is voodoo? Like, how come fuel's so cheap? I mean, obviously I know because you produce it, but
close to the source.
But one of the interesting things is, I've learned a couple of things with this. Obviously, there's the expected impact on households. If it costs you an extra £40 to fill up your car, then you're driving all the time. Maybe that's a weekly cost. For some people, they've got to cut elsewhere, which means it slows down the economy because people are not spending in certain areas. But I'm starting to learn on the impact that has on other parts of the economy. I'd been talking about this thing where I saw about swimming pools recently, about they're struggling to heat the pools for people to come in, which means either raise their prices, cut hours, or cut staff. I just saw another one today. A lady said she's given up their pub because the cost of gas for running their pub is too high now. So she's getting out of the business. And so I've started to realize how energy prices drive a large part of the performance of the economy.
Yeah.
So it's not a sensible time to be in a war and cutting off supplies from various parts of the world.
Well, it's not just the direct impact, the things that you mentioned, right?
Yeah.
It's the indirect impact. So think about this. Diesel is what powers trucks in the US, right? Diesel is up 3x in many parts, which that means that these trucks are driving all the other goods that people need, food, right? So what's the cost of food going to go up to, right? And these are indirect, but it's eventually going to come into the economy. So if we think that we're at peak inflation right now, and that the Fed is solving problems, we're not at peak inflation. This is going to last for a very long time, and it could get worse. Now we have a CPI print that comes out on Thursday here in the US. And, a lot of people are expecting it to come down from the, 8% clip that we're at right now. Well, even if it comes down slightly, it's only short term. And by the way, it doesn't cover all the things that really matter. That's CPI. It's not real inflation. They're going to exclude gasoline, which is really going to
kind of the most important part of a CPI print.
That's exactly right, especially right now.
How does the market tend to react to inflation numbers generally? Because the Bitcoin market, the first couple of high prints, there was like an immediate spike in price and it dropped back down to where it was. So it didn't really make a difference. Do people just not trust anymore, therefore it has no impact? Are they really always looking at the rate hikes?
Well, the reason why you want to look at CPI very closely is because that's what the Fed looks at. The Fed doesn't care about real inflation. The Fed cares about CPI, which is the official government number.
Okay.
And a lot of people are under the belief that if CPI, the clip at which we're growing, let's say it drops down to 7.5%, that the Fed might say, oh, we've tackled inflation. Time to, cut off, tightening. I really believe what's going to happen is they'll continue to raise rates in June and July. despite what the CPI numbers are, and then sometime in August, September decide, oh, we've conquered inflation. We've done everything, right in front of midterm elections, which is very convenient. But I think that's about the time that they're gonna say we conquered inflation.
There's a couple of things I want to talk about with that, because I spoke to Preston Pish the other day. He was here, and he has a similar feeling, but he thinks the next print, sorry, the next money print. He said he thinks they're going to print 5 to 10 trillion. He thinks they're going to absolutely blow any previous injection into the market. They're going to absolutely blow it out of the water. And that just seems insane to me. It's kind of like you get something under control, then you go absolutely bananas.
I think he could be right. And here's the reason. It all has to do with war.
Okay.
Right? I mean, you've got to fund a war. And without fighting directly into it. And by the way, if you look at the latest bill that was passed, that was supposedly the Ukraine aid bill, very little of that actually went to Ukraine. It's just a bunch of other projects, like the art museums we were talking about earlier. I mean, there's all kinds of things that are included in these bills to placate the people that are signing off on it.
Right.
And it's a massive problem in the U.S.
But if they're going to print another 5 to 10 trillion, they're essentially, at 10 trillion, they're doubling the size of the balance sheet in one hit.
Yeah, I don't think it'll be in one hit.
Okay.
But I do think it'll be over a period of time.
And that will be positive for markets, you think?
Yeah. Well, because think about it. If you have more money to spend on things, the dollar goes down, asset prices go up.
But then what?
Weimar Republic.
Yeah. This is what it is. This is yo-yo. This is the yo-yo.
Yeah. This is Zimbabwe. This is Weimar Republic. This is Argentina.
But is it like, okay? Like I have this expectation of high inflation, but I can't, 5, 10, real world 20%. But when you've heard of like 50, 100 or runaway hyperinflation, could you honestly see in a scenario where the US goes into hyperinflation? And what the fuck do you do in that scenario?
Well,
because you don't want cash.
No, you don't want cash. But it all depends on what the Fed is doing also, right? So right now we're in a really unique situation that's different than 2008. In 2008, you had asset prices going down. At the same time, you had the Fed, the Fed was coming off of a cycle, right? Right now we have a really interesting situation where inflation is so high, the Fed has no choice but to raise rates, but the economy has gone down. I mean, if you look around and you say, okay, NASDAQ is down 30% right now. In most environments, that would be a really scary thing, but people are just sort of twiddling their thumbs saying, oh, well, yeah, it's down 30%. Most big tech companies are down 70, okay. It's like, it's not that big of a deal. People don't care as much. Why? Because there's still a lot of liquidity floating around in the system. People haven't been impacted the way that they should have been impacted yet, but it's coming, right? But this is kind of a perfect storm of inflation and markets dropping. Eventually, that's going to hit consumer sentiment, and consumer sentiment's already starting to be hit, right? People are going to start spending less money, and when people start spending less money and start saving more, but they can't save more because their daily goods cost so much they can't afford to save, then you've got a real problem. This is going to look a lot different than 2008, 2009. This is probably a multi-year recession.
Right. Okay. I mean, recession will be tough. You find a way of grinding through it, but genuine 40, 50, 60% inflation numbers, if they can come to places like the US and the UK, and I know Turkey's experienced it right now. I mean, right. There's civil unrest there, and Lebanon's experienced, there's been civil unrest there. I can't myself picture, and I think everyone listening will be like, well, what does that mean for me? Well, like, what does that mean in reality? And have you done the mental model of what it means for you in reality in terms of how the economy functions? Like, I just don't know what to expect. Like, I read what happened in the Weimar Republic. I've read Where Money Dies. But I still can't picture living through a scenario like that.
I'll lay out a scenario. Let's say that you're 65 years old, which you're not, clearly.
Okay.
No. We're way more vibrant than that. But let's imagine that you're 65 years old and you had been working your entire life. You've been saving your money. You've been putting it in your IRA because that's what you were supposed to do. You've got a few $1 million saved up, which by the way isn't most Americans. The ones that are lucky have like $2 to $3 million saved up. A lot don't, and that's enough, 5 years ago, that was enough to hold in fixed income and to earn enough to live out the rest of your life off of your savings. Okay. Most Americans are probably closer to $1 million if they're lucky, right? Just working class people. And let's say that you had planned on retiring at 65. You worked a really hard job. You're done. 65 years old. I've got $1 million. I'm going to retire. Well, what took $1 million 5 years ago in savings to retire all the way through the end of your life now takes $8 million.
Huh. Okay.
So that's factoring in both inflation, current inflation, not potential future inflation, and where interest rates have gone. So interest rates are much lower than they were, even though they've been going back up, and inflation's higher. So literally nobody has $8 million. I mean, maybe the top 1% of Americans have $8 million in savings, but nobody does. So if you were planning on retiring this year, you probably got to work another 5 years.
Right. That's people retiring. But say a scenario, you're a 43-year-old from Bedford.
Mm-hmm.
You own your house, but you've still got 20 years left on your mortgage maybe. And you've got some savings. You've got a business with a good income stream. You're thinking, well, if we're going to go through like a tough 5 to 10 years, which could be, Lynn Alden thinks the inflation is going to be the story of the next decade. How do you ensure, for one, how do you ensure that you come out of that still owning what you have, like maybe a house, and you can still pay your bills, your basics, and then secondly, how do you maybe come out of that having protected some of your savings? Because if you hold it in cash, that's going to get eviscerated. And so what are the options? I know some people will buy vintage cars or property or artwork, but is that literally the only option?
At the moment, that really is your only option. If you own a house right now, you've locked it in at a good price. Real estate will probably continue to go up. It may flatten for a little bit just because it's become a little bit more unaffordable. But real estate will continue to go up because what's happening is some of the bigger, larger, the larger money managers out there, they have funds that go out and buy single family homes and just hold them.
Right.
Right. Because they're not earning the income off of bonds. Bonds have gone down in price since October, close to about 6% in price. That means that, you've lost more in principal than what you've gained in interest. So they have these entire funds, like BlackRock, for instance. Entire funds, all they do is just go out and buy single family homes.
BlackRock owns tens of thousands of homes, right?
Probably more than that.
I remember during the last crisis, they were involved in the purchase of houses. Somehow they were linked in with One West. I can't remember the detail.
Yeah, I don't remember either.
Yeah.
But I remember reviewing decks, and this is when I was a bigger money manager back in, right after the crisis. Everybody saying, hey, this is the next hot thing. The U.S. government's printing a lot of money. Asset prices should go up. Housing is at all-time low. We're launching these funds where we go out and buy single-family homes and just hold them. Sometimes we rent them out, sometimes not. Doesn't matter.
It's a store of value.
It's a store of value. And that's what a lot of people have been doing. A lot of big fund companies have been doing. And they're going to continue to do that. So even if you or I can't afford a home, or people that are listening can afford a home, well, they can. So prices are going to keep going up because they're still a buyer.
Huh. Okay.
So if you already own a home, great, good for you. If you can afford to buy one, go buy one now. That's going to be your store of value. And you've locked in a price, you've locked in a good rate, because rates are going to go up as well. If you haven't, you might want to do it now. But those asset prices are going to continue to go up. If you're younger, let's say that you're 20 to 35 and you haven't bought a home yet, well, you're probably going to be renting for a long time.
Yeah, looking at one of the charts from the other day, I think, was it Preston who was showing that chart where he showed it was the previous cycles after the Depression. Mm-hmm. There was a tightening of the money printing, and interest rates went up to something like 15% at one time. It's basically, there's like a inverse correlation.
Right.
And I was thinking, well, if this happens again, and I can afford my mortgage, a 15% interest rate would start to get a bit tricky.
That's really tough. I remember, my parents bought their first home in 1981, right? And I think their interest rate was 13%.
Did the house cost less than $10,000?
Oh, it was like probably 50. I don't know how much it was. Like probably 50 grand back then.
My parents' first house when they bought it was something like £6,000.
Wow.
It was ridiculous.
Yeah. But they paid that interest rate for 30 years.
What interest rate was it?
13%. And I kept telling my mom, I was like, you need to refinance it. They're like, no, I just want to pay it off. Like, no, you don't understand. You need to refinance this.
Yeah. It's going to get really tricky for a lot of people.
Yeah.
And I'm expecting civil unrest. I mean, we're seeing bubbling of it anyway now. Yeah. I mean, I think you just have to look at other countries around the world. It's foreshadowing what we're going to see here and in the UK where I'm from. I've got no doubt the increase in violence we're seeing is a result of tensions people are feeling. It's kind of scary times, but the thing in my head, Steve, is like, well, where's the actual reset? Because at some point there has to be some kind of reset. And I don't mean some WEF Great Reset bullshit. I mean, the Weimar Republic eventually reset. That's right. And Germany had a stable economy. At some point, this shit has to reset. They can't just print tight. Like something's going to break, and then you get an actual reset. I've got no understanding how a reset happens. I think currency tends to last for about 90 years. Is it essentially just a complete debt jubilee, a reset, and a new currency, $2 comes along? Like, how does?
Well, think about it. Germany's had 4 currencies in the last 100 years.
Okay.
Right. So, and we'll say the euro is one of them.
Okay.
Right. They achieved in the euro what they failed to achieve in 2 world wars. Control of the European economy. You guys got out of it.
Yeah.
Yeah.
I don't know if that's a good thing or not.
I don't know.
I think. Yeah, I don't know. I mean, I've seen our debts over something like 2.5 trillion now. One of the interesting things, though, is despite the US government's printing so much money, the pound has been dropping against the dollar. Can you have a look, see what it is, Danny?
Yeah.
But it has been dropping.
Yeah. Well, a lot of currencies have been dropping against the dollar just recently, and it mostly has to do with Fed action. But you also ask the question about, what happens to the dollar, right? And if the dollar continues to inflate the way that it does, if you look at China, okay, the way that China pegs its currency to the dollar is by holding U.S. treasuries on its balance sheet.
Yep.
Over the last few years, the U.S. had been increasing its holdings of treasuries on its balance sheet, but China has not. China's held flat. So that means that they have essentially what that shows me is that they have a much more of a stable currency, and they're trying to become the next reserve currency. They're opening up trade routes with several countries that are commodity producing countries. They're forcing those countries to trade in renminbi instead of dollars, and it's a really slow game for them. But if the U.S. continues to print money at the scale that we're printing, cause inflation, by the way, for other people. And by the way, any country that utilizes dollars, this is the El Salvador example, right? When the U.S. government prints more money, it causes inflation on the dollar. Countries like El Salvador that use the dollar just got taxed.
Yeah.
Right. So, which is why they've gone to Bitcoin.
Yeah, I do wonder if they're going to launch their own currency again, though, a sovereign currency. I get the feeling if the US goes to much higher inflation, it's going to become a real problem for El Salvador. And I could imagine a scenario where they do launch their own sovereign currency.
I agree.
Just Bitcoin isn't enough, and they can't continue to get fucked by US policy.
I agree with that. Yeah, they're going to have to.
Yeah, there's something is it like 14 countries are dollarized?
Yeah, at least. I mean, there's some that are unofficially dollarized.
Yeah.
Right. Like Cuba. Cuba runs in dollars. They don't utilize their own currency at all.
Yeah, or other people, they have a mixture. Cambodia, most people want dollars.
Yeah, that's right.
Venezuela, most people want dollars. I kind of don't want to get too depressive about this, but I kind of feel like over the next decade, this could be super serious, like global catastrophe.
Well, it'll definitely be a shift in power, a shift in economic power over the next decade. China's waiting in the wings. They're waiting for the U.S. to fail, and as soon as they do, they'll step in.
I mean, I'm not going to do it for ideological reasons, but do you think the renminbi is a store of value?
I hate to say it, but it probably is. I won't do it either.
Yeah, I'm not going to do it.
Yeah.
I don't think it's a good thing.
Yeah.
you might not be able to answer this, but hey, say you were both the president and the Fed chair. What would you do?
Well, as president, I would stop spending money, because the more government spending is one of the biggest contributors to inflation right now. And every time we pass a new, quote unquote stimulus bill, or all of these, this rhetoric around, well, we're going to spend our way out of inflation. I mean, people actually believe this, by the way, that, oh, okay, well, I guess you'll just spend more money and send more stimulus checks, and that'll help us with inflation. I'm like, no, that causes more inflation, guys. And it doesn't help in the way that you think it does. But really, you have to cut spending. You have to get rid of all these excess programs that we have, that just don't make any sense. We really have to crack down on the budget. And the less we spend, the less inflation there'll be. That's number one.
The impact on that would be that temporary loss of that liquidity going into whatever projects, unemployment rising because people within government losing their jobs, the end of a large part of the rent seeking, but these people then have to go out into the economy and become productive.
Yeah, that's right.
And the economy will likely go into a recession, but have the opportunity to come out of it and avoid hyperinflation, which is probably a better scenario, but it isn't usually palatable for people who are vote seeking.
Yeah. Well, think about this. I mean, productive people. I mean, have you ever met a U.S. congressperson or senator, and have you seen how many staff they have? I mean, is that really a good use of money? And
what was that number we saw the other day or came out? But the percent of the U.S. economy, which is
it was about 40% or something.
40% of the GDP was government spending.
Yeah, that's right.
That sounds like everything I learned about what happened under Chavez in Venezuela was a massive amount of income coming in because oil prices $120. I think 1 in 3 people in Venezuela, I think, were employed by the state. I could be wrong.
Yeah.
But when the price of oil dropped to $60, they couldn't pay the people, and that's where it led to the hyperinflation situation there. You just think, oh yeah, well, these countries are kind of a little bit corrupt. And then you think something like the US or the UK or Europe, you think, wow, they've got smart people in there. They know this. They don't want to go into a hyperinflation scenario.
The US is not corrupt at all, not one bit. I don't know about the UK.
Well, I think of it as a different kind of corruption. I think God, I might sound completely almost racist in this scenario, but I think smaller states tend to have more kind of dictator corruption, whereby they tend to hold power. Where I think places like the UK, Europe, and US tends to be more like subtle corruption within the confines of democracy.
Right. Well, look, we're not murdering journalists for speaking out against the government, right?
Exactly.
I guess that's the definition of corruption.
You can't get their hands on Assange, that's why.
Ooh, Danny coming in hot. They might get him soon if Preeti Patel.
Well, the journalists here commit suicide.
They do. They do. Yeah,
they don't get murdered.
Yeah, they do it in Russia as well. They shoot themselves in the back of the head.
Yeah.
But God, you just think, what if you knew a hyperinflation is like, the best thing is to accept the natural cycle, accept that you might lose the election, but do the right thing to avoid hyperinflation. I don't know but therefore I don't know if is there some kind of national security issue, and it's a game of chicken between countries. You break first.
Well, here's what happens, right? Because there is a game of chicken that's always being played, right? And it's called exports.
Right.
Okay. So if the U.S. is producing washing machines, and China and Korea are producing washing machines, and the U.S. prints so much money that things cost more here, then there's a balance that's offset in exports, right? The stronger a currency, the more their exports cost other people to buy. The weaker a currency, the less, right? So if we go too far, then our exports begin to cost less because our currency becomes weak against those other currencies. If that makes sense.
That makes sense.
So you've got there's a balance that's always being played, and so that's why China keeps having to step it up, because their whole business is exports.
Yeah,
their whole economy is exports.
But is there any sense in bringing back manufacturing? to the US? Is that a viable scenario? Let the currency weaken?
Well, I mean, there has been really for the last 10 years, 12 years, a real push to bring manufacturing back to the US.
Okay.
And it's happened mostly regionally, but also at the federal level. There's been a real push there, right? Whether it's the Obama administration, the Biden administration, even the Trump administration, have been really pushing to bring back manufacturing.
Okay, and look, if you were the president, you would stop spending. Actually, on that point as well, I just saw this fascinating thing in the UK. Obviously, they're trying to cut spending as well. Mm-hmm. And one of the things they said they were going to do is, we got the number, didn't we? It was 90,000 employees. Mm-hmm. They wanted to let 90,000 government employees go, and I think that was about, I can't remember what percentage that was, but that was the increase in the number of employees in government in the last 4 years. So despite the fact it's been difficult economic times, COVID, the government has continued in the UK to increase the size of its staff.
Right.
Which seems completely fucking stupid. It goes back to the point that every government really does need to have a budget. We have a budget. This show has a budget. If the show goes over budget, I can't pay my staff, they quit. Therefore, the show dies. Mm-hmm. In the UK, I have it's so simple, Steve. I have a budget. There's my mortgage, there's my shopping, there's my holiday, and there's some stuff for the kids. If I go over that budget, I can't pay something like my mortgage, I lose my house. The government does not have it has a budget, it goes over budget, and it just takes money off us.
Yeah, that's right.
Like, it's so fucking simple. Why don't people fucking realize? Why do we put up with this?
Well, it's because of the short-term nature of politics, right? I mean, it's long-term, but it's short-term too. And most people point to, at the federal level, the president, at the state level, the governors, and they have limited terms. So they want to do the best they can within their limited time. For the president, it's 8 years. So anything that you can push off to the next guy, every single guy will do, right? So you want to graduate with the best possible economy possible, and then let the next guy suffer. Happens at state government as well, right? State governments will always issue a ton of bonds to pay for a lot of infrastructure and a lot of cool things and bring more jobs, and then they leave it to the next person to manage. And then what does that person do? Well, they're forced to now take up the slack and do the same thing, and they just create this, bigger and bigger debt gap. And very few states actually have a balanced budget.
Do you think this culture war that's blown up over certainly the last 4 years, but it's been growing over the last decade, do you think this is intrinsically linked to what's happening?
Not really.
No.
I mean, this has always happened, and and it's always been, the Democrats blaming it on the Republicans, the Republicans blaming it on the Democrats. The cultural wars may have exacerbated it a little bit, but it's really the same story, just different tune.
Yeah. I don't know if you remember, but you probably did a couple of years ago, we had that other podcast, Defiance, and we made a show that you came on. We did one on supply chains. How much are you looking at that as well now? Because we've seen the actual cost of shipping containers has gone up with the cost of, I don't know what fuel they use in the ship, but whatever. We've seen China locking down large parts of its economy, which I also want to know what the fuck's going on there, because that seems weird. Mm-hmm. I don't know if so. I don't think it's to have zero COVID. I don't know if they're doing dry runs for war.
Right.
But there's supply chain issues there. Are you looking at that as well?
Absolutely. I mean, some of the supply chain issues, look, inflation is being caused by a lot of different things. The majority of it is money printing and loose monetary supply, or loose monetary policy. But supply chains is contributing to short spikes, right? So we had a chip shortage, for instance, which automobiles just became unavailable for a long period of time, or anything that ran on a chip. But then all of a sudden, magically, they all came back, right? So Christmas time, you couldn't buy anything with a chip for a long time, and all of a sudden, you had TVs stocked everywhere, more TVs than anybody even wanted at Best Buy.
Right.
Like, okay, well, where did all the chips come from? Right. And so there was a shortage there. Food has been a really interesting thing to watch. There's a really bizarre thing happening, and I don't even know why or what it's attributed to, where all these food processing centers are catching on fire.
I've seen that.
Have you been following this at all?
Yeah, like, what is it, like 31?
I'm not sure. I'll have a look.
I mean, I saw like, was it the egg one the other day?
Yeah, there was just an egg one, and then there's been like milk facilities, and my co-founder just had a baby, and she can't find formula. She's been sending me pictures. She's like, we got to write an article about the formula, supply shortage. There's no formula on the shelves.
So I have seen about these food places that have been going up in flames, and I've seen the natural reaction by certain people who you would say are more suspicious, conspiratorial, although I don't want to say conspiracy feels like a wrong word, because
when real things are happening and you're asking questions, it's not
a lot of people
really conspiracy.
Well, a lot of conspiracies have turned out quite true over the last few years. But anyway, there is this kind of finger point of like, what's going on here? Is this like on purpose? Are they trying to squeeze the economy? So my first question is, well, why? Who benefits from this?
Right. Well, who's they?
Well, yeah, I mean,
right?
some secret black ops to, I don't know, someone going around and firebombing these places. Like, but like, I know it's happening, but if it's something sinister, who and why? Like, I'm trying to answer. It's like, is this some like Chinese Russian plot to to starve the US? It just sounds just completely moronic.
It does.
Yeah. So it can't be that, because I would imagine people would be caught quite easily without doing that. So is it internal? I was like, well, what benefit does this have to the government? There's no benefit. But when you start to look into it, actually, I think it was Jeremy who looked it up. These are actually this does happen. But there has been an increase recently, and I think one of the reasons being is all these places shut down during COVID, or some of them shut down during COVID. They've been reopened, and maybe there's been like staffing issues or parts issues. So there could be kind of a correlation between that and and what's been happening.
Maybe they're not making enough money and they're collecting on insurance, setting a place on fire. I mean,
that's a
see,
fair...
now I'm a conspiracy theorist because I just created a theory.
Well, no, that's well, I guess conspiracies are theories.
Yeah.
What do you find?
I mean, a lot, but nothing. Like, there's been a lot of fires, but nothing sort of linking them, obviously, or anything. I don't know.
I think it's just Twitter linking them.
Yeah,
but I mean, it's certainly real. There is a lot of fires happening.
I'm going to say I don't know. I'm just going to say all I know is it's happening.
Everything's fucking weird at the moment, Steve.
Everything's weird.
Should we just laugh about it? Drink whiskey?
I think that's what you have to do it. You have to do it.
Danny, can you bring up Dan McCardle? He did a little tweet thread this morning. I want to get your opinions on this. I don't think it's a healthy time right now to be telling people, hey, you should buy Bitcoin. It's an inflation hedge. I'm kind of nervous with that narrative at the moment, because some people were buying Bitcoin at $50,000, $60,000 to hedge inflation, and not only has the price dropped, they've also had their money inflated away. But I found this really interesting. So if people listening, Dan McCardle claimed Bitcoin has been an inflation hedge. Reality. Bitcoin responded aggressively to the 2020-2021 money printing and front-ran CPI inflation, and BTC is still way ahead of other assets. So I think this is a really interesting point, because the narrative of Bitcoin being an inflation hedge did start in 2020. People were talking about it then. I increased my stack. I expect you did. A lot of Bitcoiners I know did. Do you think this is just re-narrativing?
Well,
or do you think that's actually a fair shout? Like Bitcoiners are good at front-running inflation?
Narratives are simply narratives.
Yeah.
And I'm going to say that most people want to assign very simple solutions to things. It's like, okay, if there's inflation, you buy gold, then gold will go up when inflation goes up. Actually, that's not true.
Okay.
Bitcoin, it's an inflation hedge. Why? Because it's limited supply. If the reality is assets trade the way people want them to behave.
Okay.
Very simple. It doesn't matter what things are supposed to do, right? I mean, like, good companies are supposed to go up in value. They don't always do that. Sometimes bad companies will spike, right? AMC Theaters. Remember that? GameStop.
Literally
right?
No business.
Things react the way that people trade them, period. If somebody wants to trade out of risk assets and Bitcoin is traded 24/7, and you're running a book and an event happens on Saturday and you can't trade stocks out of it, what are you going to do? I've got some Bitcoin in my portfolio. Why don't I just sell some of that? And then I'll sell the rest of it when the market's open. So that's all it is. I think people try to get too complex in the way that they assign reason to things, and the reality is things simply trade the way that people trade them.
Right. So Bitcoin doesn't have a narrative. It really is. Some people are buying a lot of it, and some people aren't.
If you see it as risk and trade it as risk, it becomes risk.
Right.
You know?
It is risk. What do you think, Danny?
I mean, I think what Dan says here is quite interesting because he's basically saying like it has been a perfect inflation hedge, but
only because you timed it right.
Exactly. So I guess it's hindsight, like everything.
Only because you bought it before Saylor and bought it before Elon Musk, and then we had a run up.
Yeah.
What I'm curious of is whether any of the people that have sort of seen what Saylor did in the last run up and have been sort of sitting on their hands are going to sort of start deploying in the next, I don't know, year, 2 years.
Yeah.
Because people might get a better buy price than Saylor at this point.
Average buy price. If someone was buying today, where are we at? 29.5? 29?
Something like that, yeah.
Yeah. And what it was 31 average?
I think it's something like that. I think it's underwater now.
I mean, you can't buy $1 billion right now and beat him because you will move the market, but you could certainly buy small amounts and
Yeah.
But the tricky thing with Saylor Singh, like people have had quite a pop at him about his average buy and being below. He bought what, 3 billion? He's gonna move the market.
Mm-hmm.
But next cycle, if we do go above 70 or stay above 70 or hit 100, he's in prime position. But he had to buy into this cycle to do that.
Well, I saw an interesting tweet once, and I can't remember who to attribute it to, but it was somebody said, I should have known that when a software company that nobody heard of became famous because they bought a bunch of Bitcoin, that was the top of the market. But applying my principle really quick, let's go back to gold, for instance, right?
Yeah.
Typically, gold doesn't go up when inflation goes up. It's usually neutral. Gold historically has always gone up when people anticipate that inflation will happen.
Okay.
Right. So when smart people start looking at, the markets and, oh yeah, we're going to get inflation in a couple of years, they'll start loading up on gold in anticipation. Gold prices go up ahead of inflation, and then they remain stagnant. Okay. And then once the fears are over, gold's the first thing that sells off. Right. So that's why there's not a direct correlation there. Same thing with Bitcoin. Over the last 12 years, people have been buying Bitcoin in anticipation of inflation coming with really loose monetary policy. Well, there's been loose monetary policy. There hasn't been inflation, but Bitcoin's been going up drastically in anticipation of that. By the way, that's not the only reason it's gone up. There's several factors. That's just one of them.
Because I think it's also gone up because people have bought it because they think it's going to go up.
Yeah, that's exactly right.
Yeah.
That's a risk asset.
Yeah.
So that's the other factor. And then the final factor is just simply the network effect. The more people own it, the more price has to go up to support the number of people owning it. Right?
Yeah.
So those are really the three main factors. Well, when one of those factors goes away, right? The first factor that went away was, okay, people no longer are taking big risk. They're selling risk. Well, that causes price to go down. The other one is, okay, well, inflation's here now, right? We've already bought Bitcoin in anticipation of inflation. Now it's here, and now we're going to sell it off and buy those dollars. So that's the other thing. And then from a network effect part, I don't really see that many more wallets being created versus say 2 years ago. So that sort of flattened out as well. So it's going to take one of those three things to bring it back up.
We also had the halving narrative, which timed nicely.
Yeah.
I think that we talked a lot about.
Yeah.
I mean, we're a year and 300 days away or something, and I'm expecting in about a year, when the year to go, that the people will be chirping up about that as well.
Mm-hmm.
I think that's more narrative.
Yeah.
What I am interested in is more if people start to think of Bitcoin as a hedge in another way, not a hedge against inflation. It is, but a hedge against a collapse of the currency. And I know that is essentially a hedge against inflation, but I'm thinking of it in a different way, in that I want, if a currency collapses, if the dollar collapses, the pound collapses, I want to hold something that's seen as valuable. And you said property. I'm thinking, I'm not thinking hedging inflation. I'm just thinking I have something that has some fucking value.
Yeah, exactly.
Does gold have any part to play in this, do you think?
I think gold has lost a lot of its luster in the last decade. A lot of people bought gold into. Well, gold used to be what people used in the place of Bitcoin.
Yeah.
And I'm not saying that Bitcoin has replaced it. I'm just saying that what happened in the last financial crisis is people started buying gold in anticipation of inflation over the next decade. Well, part of that anticipation was that central governments would be buying gold on their balance sheet to support their currency. That stopped happening. That usually happens in a recession because that's the safety net for a government central bank. But what's actually happened is central banks have on a percentage basis have loosened up their gold reserves, and the U.S. Treasuries has replaced gold as the holding instead, which is a really bizarre thing. So gold just, it really hasn't done what it has in the past, and it's lost that store of value,
Right.
because governments aren't using it as a store of value anymore.
But didn't China and Russia bought a shitload of gold?
Russia did buy a shit ton of gold back in 2009, 2010.
Yeah.
But no, China focused on U.S. Treasuries.
Okay.
And over the last decade, the gold purchasing has just basically stopped.
But if the dollar starts hyperinflating and it's no longer there for a store of value, could you see a switch back to gold?
Probably not. It'll probably be other currencies that are strong.
Okay.
A basket of currencies.
A basket of currency. Interesting.
Probably with renminbi.
So what is the role in Bitcoin in all of this? Is it just a fucking random? Or because Preston talked about this. He thinks we could see this transition to Bitcoin.
I think it could happen.
Yeah.
I think it's going to happen on a more regional basis first.
Right.
I've always thought this, right? I saw your tweet, by the way, about Monero.
Yeah.
And I agree with you. A lot of people don't agree with you, but I do.
Well, there are people who have agreed with me privately, and they're not going to say it. There's people who've agreed with me publicly, and there's people who've disagreed.
Yeah.
I just don't. I think if you're going to call something a scam, explain the scam.
That's right.
You can say you don't like it, or you can say, look, I think it fails against Bitcoin over a long enough period of time, but I'm not hodling with Monero. I just know there are transactions that I would maybe consider doing. But it's just, to me, it's not a scam. But I've said that since when we did the Fluffy interview was 2018, right?
Yeah,
I've been saying it since then. It's just I struggle calling myself a Bitcoin maxi because I've always been like, well, Monero's okay.
Well, I would even go even broader, right? I personally choose Bitcoin.
Yeah.
Right. I like the fact that there's potential competitors out there because there's people that have different needs.
Yeah.
Right. There are some countries, look, it's very easy to track Bitcoin transactions.
Yeah.
Right. I mean, this is why Silk Road went down, because we traced every single transaction, and the FBI went and took it down and took around a lot of people around it. There are some countries that can't afford for the people in those countries where they're very oppressive regimes can't afford to just simply hold Bitcoin because it's not private enough.
Mm-hmm.
They need something else. And that's where things like Zcash, Monero come in.
Yeah.
Right?
I think I have a preference for Monero over Zcash.
Sure.
My problem with Zcash is my understanding is that cracking it is like a Sudoku, and not enough people actually using Zcash at the moment.
Yeah.
And I think there's different trade-offs. We've actually got Seth, the guy on Twitter, Seth for Privacy. I don't know if you follow him.
Right.
He's worth a follow. He's coming in later today. We're going to be talking to him about that, because I don't know the trade-offs. I mean, I have people telling me that you can achieve privacy with Bitcoin, but really I'm going to make mistakes.
Yeah.
But also with Monero, what is my risk? Usually it's going into the market and coming out of the market, what exposure to have. So we've got someone in to explain to us. Another thing, actually, I meant to talk to you about. We had Andrew Desler in yesterday. He's a climate scientist who debated Alex Epstein. He's also on Rogan's show. He said there's a massive benefit to the economy for moving to renewables. And he said the problem is a large part of the economy is reliant upon a commodity where the price changes. He said if you can move the economy so large parts of the grid are from renewables where the marginal cost is zero, you don't have these impact of commodity prices. Therefore, you don't have commodity wars.
No, that's really interesting.
Yeah, it hadn't crossed my mind. He was like, yeah, I mean, if you're... he has a price where it costs to charge his Tesla. I assume it's a Tesla. He didn't actually say, but his electric car. And if our gas prices, fuel prices have doubled, has it cost him double to recharge his car? No, it has increased because part of the grid is powered by fossil fuels. But at the same time, he said, I'm looking to put solar panels on my house. So you can get to a point where even at an individual level, that perhaps you can hedge against the inflation of commodity prices by being electrified. But if you can get to a large part of the grid being renewable, you can't have everything, but if you did, you don't have that commodity prices impacting the economy. And 28%, did he say the Texas grid is now renewable?
Yeah.
He thinks it can get to 70%.
Yeah.
Other people argue against him, and he thinks the other 30, you can't get beyond 70% on renewables.
He said you could with nuclear.
Yeah, no, but well, it's debatable whether nuclears are renewable.
Yeah, get carbon neutral or whatever.
Yeah, carbon neutral. But he said you can get to. He said the only reason we're not going faster in Texas is because of incentives. But if you get to that point where you essentially electrify your grid from, you electrify your houses and cars, and you do that on renewables, you suddenly don't have that impact because you have, like I say, the marginal cost is zero. It hadn't even crossed my mind.
Now that's really interesting. Well, and this is one of the issues with calling things renewable energy, right? It's like, okay, you've got renewables, we've got carbon neutral, you've got, carbon positive, but are interesting anyway, like natural gas. Natural gas just gets released into the air. Why not capture it, right?
Yeah.
So, and I think definitions are really big things that people get caught up on. But all that being said, it is interesting to get more, to have more renewable energies, whether it's hydroelectric or solar, wind. Again, the problem with some of those are, they aren't really renewable because you've got to actually build the solar panels with non-renewable materials, or you've got to build windmills with non-renewable materials.
I think the renewable, hardly anything is renewable.
Yeah, exactly. Exactly.
But I think his point on renewable is that it's avoiding fossil fuels. It's avoiding increasing carbon in the atmosphere. Yes, he talked about this as well. He did talk about solar panels being large parts of them can be recycled. Parts of the wind turbines are moving to materials that can be recycled, but also an investment in that will lead to a lower cost of building out that infrastructure because you have the economies of scale, and these things are improving.
Yeah, that's right. Yeah, hydroelectric is probably the most renewable of all things, which to me, that's why it's really interesting when New York passed that bill to try to shut down Bitcoin mining in New York, and a lot of the energy that they use is hydroelectric.
They didn't ban all mining, didn't they? Just ban fossil fuel mining.
Fossil fuels,
yeah.
But it's impossible to say, okay, well, I'm going to get all of my my source of energy from one thing or another, because it's a mix. Yeah,
because they're not plugged into. Yeah, and that goes to Nick Carter's point of saying you're essentially saying what data centers can do.
Yeah,
and SHA-256 hashing is banned in data centers now in New York. I think that was an astute point. Yeah. So last thing I want to talk about is Senator Lummis's bill, because you've read it through. What's the name of the person she co-signed? I can't believe. I'm sure it begins with a G. Anyway, Danny will look it up. So some people, I think, will react negatively because they don't like any form of regulation. I think some people also understand regulatory clarity is useful. I think Senator Lummis has been smart, and she's front-running anyone coming in with shitty legislation. I think it's a smart move. Making it bipartisan was a smart move. She's obviously very pro-Bitcoin.
Kirsten Gillibrand.
Regime, yeah. I haven't actually read through the bill. You've been reading through the bill. Any key takeaways?
Yeah, look, I actually think it's a pretty well-written bill, and I agree that we need legislation here, because without legislation, you just leave everything to interpretation. And sure, people that don't want any there's people that don't want any language at all, but look, I'm in an industry where I need as much clarity as possible so that I can do my job. And but some of the interesting takes that I had on it was, I love that there is a de minimis transaction amount where you're not going to be taxed, because previously, according to the IRS tax code, if I were to pay you, if we were to go get pizza together and I'm like, okay, here's $10 in Bitcoin for the pizza, I'd have to pay taxes on that $10. And I'd have to figure out a way to calculate that. And if I'm using a centralized exchange, or, they would do it for me, and then I would have a massive tax bill for all these little microtransactions that I did throughout the year. If you keep it under that $200 limit, now I can go out and pay my hairdresser. I can pay, just people for goods and services, right? Just, as long as it's under $200. And I think that's really good. I think that's great for Bitcoin in the U.S., right? You already have that in several other countries. So that's really good clarity, and we don't have to sit there and figure out our taxes for people just trying to make payments, like basically Venmo payments, right? And then I like the fact that there's an inflation adjustment feature on that, so that it doesn't stay stagnant at $200, because what's $200 2 years from now? I don't know. It might be a hamburger at McDonald's. I don't know.
Yeah, it's like that thing. What's that? I know in the US where if you spend $10,000, you buy something for $10,000. There's that form you have to fill in. It's like you have to report it, don't you?
Yeah, that's AML. Yeah,
but that's never been it's never been inflation adjusted.
Yeah, that's right. That's right. So $10,000 today is way different than what it was 20 years ago, when the Patriot Act came out.
Yeah, and it's going to be very different in 5 years based on our conversation today.
Yeah. So I think that was a really good piece, and then I love the fact that she actually put Bitcoin under a regulatory agency, rather than saying, okay, it's out there and everybody out there is trying to fight over who gets to regulate it. And she's
the CFTC.
Clearly in the CFTC, which that's probably where it belongs.
Because it's a commodity.
Yeah, I think I see it as a currency.
Right.
But yeah, commodity is fine. That's really where foreign currencies are regulated anyway.
And essentially that removes it from the SEC.
Yeah, it removes it directly from the SEC. But at the same time, if you were like, say, try to launch a Bitcoin ETF, that still falls under the SEC.
It does. It does. Okay.
Yeah.
Do you think this makes a Bitcoin ETF more likely a spot ETF?
I think it does. I still don't think we're going to see one in the next year, but this definitely gets us one step closer.
What's the holdup with this? I mean, there's a spot ETF in Canada, right?
Yeah, Australia,
Sweden.
I think, yeah, there's one in Europe somewhere. I think South America have one.
Yeah,
all over the place. Brazil.
Yeah.
I think it really has to do with regulatory clarity. Gensler's made it very clear that he wants to have a little bit of oversight on the exchanges, which, by the way, I don't think it's a bad thing. Some of these exchanges having some oversight. I mean,
Luna,
exactly. I was going to say Luna 2.0.
Yeah.
Right. I mean, there were some exchanges in the U.S. that listed Luna 2.0. I'm a little confused about that one.
Yeah. Kraken was one.
Yeah.
Jesse explained why he was challenged for it.
Yeah. I would love to hear that.
Yeah.
Yeah.
Did you see?
No, I'll have to listen to that one.
No, he didn't tell me.
Oh, okay.
Yeah, I didn't speak
I'll
to
have
him.
to look it up.
I just saw it up on Twitter. But he was explaining that. But yeah, it just feels like the US is giving ground to other territories by, is Gensler himself basically a problem? Is he holding the keys to all this?
Yeah, look, I wouldn't call him a problem. I think we all want to paint somebody as the enemy of Bitcoin.
Okay.
I actually think that Gensler is actually pretty intelligent on the subject, and I think he's really trying to just implement consumer protections in the best way that he can, and the best way that he knows how to, as the chairman of the SEC. I don't think it's out of spite. I don't think there's any other issue there other than let's just have clarity before we do this. Now, if you come from the industry like we are, then we're like, there's plenty of clarity. I don't get it, but I think that he's just trying to just check all the boxes.
You know what happened? It'll get announced, and then the market will crash on its launch.
Oh, absolutely.
Like every other market product.
Yeah, because now you can short it.
Yeah, now you can short it. Fuckers. All right, man. Listen, just final question. Going back to where we started, the Fed will make a probable rate hike, you think, June and July?
Yeah, 2 50 basis point rate hikes, one in June, one in July. We'll see in September. There's no FOMC meeting in August. September, I really believe that they're going to hold flat.
Okay.
We'll see what happens. I mean, I got to see the data over the next month or over the summer. But if I had to predict today, hold a gun to my head, September, they say, hey, yeah, I think we've kind of beat inflation for now. Midterm elections are coming up, is really, what that means. They hold off in September, October, midterm elections happen. There's clarity in the market stabilize a little bit, and then they pick up where they started.
Okay, so stack cash, and then about September, start stacking some Bitcoin. Maybe,
Yeah.
Not financial advice.
Go on a vacation.
Go on a vacation.
Yeah, leave the summer.
All right, cool. Steve, always great, man. Love seeing you, dude.
I love seeing
it
you.
here in Nashville. And see you soon, buddy.
Awesome. Thanks, bro.
Thank you.